our lunch and learn, to our new decade, new home lunch and learn. My name is Melissa Jolliff. I'm with Real Estate One. I'm a realtor, and I've been in the business about a little over 6 years now. So I know a little bit, but I'm still learning. But our purpose today is to talk about the rehab loans, 203K loans. You're going to hear from experts on rehabbing homes using the 203K. We'll go over the financing of the loan and how it works, how it can benefit you as a realtor, a lender, contractor, and as a buyer or seller. You'll be updated to the HUD guidelines for the 203K. This rehab loans is something that we all do. I don't know how many realtors do we have this week. We have realtor there. And it's such an unused loan. And it can benefit, and I'm just talking to realtors. I think y'all like getting that commission check. I know I do. I'll be waiting. I call the account like, hey, where's my check at? It's not in my account. Get it to me quickly. But it's something you should be talking to your clients about, buyers, because I don't know how many times we go show a home and we get in the home and they look and say, oh God, it needs so much work, but they like the house, but when they look at all the work, they want to go see the house. And then you go show a house with all the bells and whistles, and you got to go to a fight to get it, your offer accepted, because you and 10, 12 other agents trying to get the house that has all the bells and whistles. Now, what if you could take the client, show them a house they love, but need work done on it, and you can use your 203K loan, the rehab loan, and be able to get that house and do the work, and it's financed in their loan.
Now, I have a question with the financing. Now, is that a different rate? Is it a higher rate than the normal?
The financing is going to come from this young man over here.
Okay.
And then you can ask him all about it.
We're going to do a whole session on the finance and origination portion of it. So if you have any origination questions or finance questions, just hold them or write them down.
You're going to walk away with such good information today. And I think it's a great way for realtors to get that low-hanging fruit and still get money for their house. You're going to hear all the details on how it's done, step to step, the difference between the FHA 203K versus a conventional renovation. And it's a win-win for lenders, because a lot of lenders shy away from it, and because they think it's too much. But you're going to hear all the truth, the myth that they talk about the loan, and the great benefit of using it. That, come on, Mr. Walter.
I'm glad this is not no improv. Is that Apollo or anything? I'll do it. Yeah, it would have got me all right. But again, welcome. Thank you for coming. I may not be here long, but I just wanted to say, again, thank you for coming. Putting this together to give you just a little bit of snippet, because there's a lot going on as far as doing rehab. There's a lot of moving parts with it. So hopefully by the time this presentation is over, if you have any questions, you can reach out to any of us. We'd be glad to help you get you where you need to be. So, I'm gonna talk a few minutes about the myths and truths of a rehab loan. That's me when I was 100 pounds lighter. As you see at the top, the name of my company is PPT Inspections. My consultant side is my rehab consultant. I've been in this industry for 30 years. Started off as a residential designer, and I'm evolving, doing home inspections. I ended up becoming a certified consultant in 2009. So So everybody wants to know, what is a HUD consultant? Well, you can't read that fine print, but you'll get a copy of the slide once it's all said and done. But in short, a consultant is the person, if you want to view it as a project manager, which we're not, but it's similar. I'm the person that the lender will reach out and say, okay, I have a client that's looking for a rehab, whether it's a FHA or non-FHA product. Consultants are able to do that work. So I get a phone call from the lender, say, hey, I want to introduce you to my client. They're looking to have a house renovated, and blah. That's how I get involved. Now, I need to get a show of hands. How many realtors in the house? So I'm gonna jump right ahead. By the time I get a call from a realtor, it's when you're trying to save your job. I'm just being honest. You know how it is. You thought you got them on the conventional, you thought everything was going okay, then somebody throw a curveball and say, you know what, I want a kitchen remodeled. I want a bathroom done. And it's like, oh man, I don't want my deal sunk. Then I gotta call, then I gotta find out that my lender's gonna go and say, okay, go with a renovation option. Then I get on the phone with some disgusting people on the other end saying, why do I need you? I don't need you, I'm about ready to close. Then they say they want to get a renovation. I get those calls. And my answer to that question is quite simply, I'm not your enemy. As a matter of fact, at the end of the day, I'm probably going to be your best friend because I'm the one going to get you to the finish line. And the reason why I'm saying that is because expectations is 90% of a job being successful, I'm being honest. And what I mean by expectation is you need somebody to talk to, or you need somebody to talk to as far as talking to a contractor, how to get contractors, the quality contractors. You need somebody to talk to as far as getting a borrower to understand the lingo, to understand this is not HGTV. Right. To understand that at the 57-minute of an hour show, that they're being their dream home. Because you got to start from the beginning to get to that end. And a rehab loan, that's going to take, depending on the project, it's going to take from 3 months to more than a year. And the reason why it take more than a year, if you, especially you have a house out here right down the street, it's a complete gut job. No sane contractor going to be finished in 6 months because it's just too much work. Even if you have a crew like HGTV, pushing 6 months will be a stretch. But it's my job as a consultant to manage expectations. So, as we see here, or you'll see when you get an email about the slide, it just tells you what I do as a consultant. So hit the next slide. So again, the goal today is to educate you about how to use this as an option. So I tell this to all of my realtor friends. This is an option. I'm not sitting here trying to tell you to discard your move-in ready product because that's how we make money. If it's a house go on listen, you're going to try to sell it. You're trying to close the deal. However, because of the economy, that move-in ready properties are virtually, I can say it's loosened up a little bit, but still, it's not what it was a few years ago. You need another option. Utilize this product as an option. I get phone calls from lenders from California, lenders from Texas who have extra money about buying a house or buying a quad. Now, does it make sense which is fine, we got plenty of stock, but it doesn't make sense for us to be left behind because of the lack of opportunity. A lot of people don't know about this opportunity. And what they do know about it is not exactly updated. It's not up to date. That information was sold 20th century. So this product of the rehab loan could be your ticket to more closings. And even when the move-in ready is online, you still can use this option to make some extra money. How many contractors in the house? So you understand the fact that what if you could hire extra crew? Okay, if you hire extra crew, that's what we call generational wealth. Because you being as an employer, so having one crew, I have an extra crew to do my rehab. So this product can be a win-win for everyone. So to my lender friends that's in the audience, you know, I gotta ask this question. To that, I'm gonna ask Terrance. Terrance, you a lender. Can you tell me what is the timeline between closing on a move-in ready project versus a rehab project?
I gotta stay for my presentation.
You gotta stay for my presentation and find out.
Okay, all right. I thought I could get them, but you got me. But nevertheless, the difference is not that much. See, one of the big hangups that we have in our industry is we thinking that if we want to go the route of a rehab, it's going to add extra time to closing. If we get the right team together, it's not going to be the case. So this loan could be that ticket for you to get generational wealth. So how are we going to get there? How are you going to get there? How are we going to get there? I'm going to hit you with a few quick hits. This was last year. As you know, Detroit has a whole lot of distressed properties. A whole lot. From single family to apartment buildings. Now, does it make sense that if we get the right team together, we can solve one of the biggest issues that's going on right now is affordability? You can use this loan to get you there. Now, it's up to you about how you're going to spend the money once you sell the property. But if we get the right team together to make an impact to affordability, they're going to love you. You're not a slumlord or anything like that. You're just somebody who cares about, I want to get a family into a nice, clean place without worrying about what you see on Fox News about those kind of other people. I should say other people. So anyway, so I just want to say that we could make an impact into our community by using this product. You can go on to the next page. Okay, Terrance going to explain this ad nauseum. I'm just going to give you a quick run through. As a consultant, I have access to FHA, which is the 203K product, VA, USDA. We got to worry about USDA in this neck of the woods, but it's coming up because we got some farmers coming. Yeah, we got farmers coming over here. But nevertheless, for those within the FHA product, you can use the consultant. Next slide. For the non-FHA, which is conventional, which is the Fannie Mae home style, or it could be the Freddie Mac choice, they still asking for to use the consultant. The reason why is real simple. To alleviate a lot of the issues you see on TV, which is on Fox News, and you hear those stories about a contractor disappearing in the ether. Having a consultant on board will pretty much eliminate that situation from occurring. Contractors on my referral list, I vet. I make sure they have the capacity to do it, and they also have to have the credentials that the lenders are for them to be on the list. My contractor, I vet it. So I don't have to worry about them skipping town or anything like that. And there's tips in case you find a contractor who's not capable. You know, the lender's going to do their diligence. As a consultant, I'm going to do my diligence. So we're going to make sure that as a borrower get to use this product, we can pretty much assure them that you're going to get right people doing your project. So, I'm going to give you one example of myth and truth. Just one. You hit the next slide. One of the myths that you'll see is high interest rates. That's a myth. Of FHA product or non-FHA is competitive to traditional avenue of purchasing a home. So I'm going to leave you with this. if you run across a client that bought a home, can't wait to decorate their home, to make it, make that house a home, but they go to a big box store to get it financed. Can I get a guess about what those finance rates are going to be? What do you think that's going to be?
20-some%.
You got jokes. Let me put it this way. Everybody got an introductory rate. So it could be a 0 to 7. It won't be low. But what's going to happen when the year expires? It's going to jack up to 30+%. So utilize the Rehab product, get it at a competitive rate, and you be the saver. You be the saver. Though, and a whole bunch of other information is there at your disposal. If you have any questions, my information is on the table here with the pamphlet, and we are here to educate. We can't get all this stuff crammed into an hour, but one thing I can say is, if you have any questions pertaining to this product, reach out to our team. Just reach out. Okay, if you don't have any questions, anybody got any questions?
Are you holding the button now? There you go. Turn it up. Oh.
Yeah. Thank you very much for hearing me.
All right.
Thank you. Enjoy your lunch.
Hi everybody, I'm Adrienne. Thanks for coming. I am a licensed contractor and a realtor. I have done FHA 203K projects as a contractor. Haven't done them as a realtor, but I'm open to it. So I'm here to discuss Legal Shield. It's a company that I'm involved with, and they can help you with everything from writing up a will for your family to if you're a business owner, helping you to streamline your intra-office processes. There's membership perks. They can review contracts for you and everything in between. So I just wanted to kind of give you guys a brief introduction. Everybody who signed up will get an email from me with a small video, maybe like a minute and 30 seconds, just kind of explaining some of the products. If you're interested, you can follow up with me and we can kind of go from there. My background, I started out as a contractor doing hazard claims in Toledo, Ohio for mortgage field service clients like Safeguard, MCS, Guardian Asset Management. Ended up kind of branching out and working in Michigan, Florida, Texas. Michigan is home for me, so I enjoy being here. Done quite a few projects. I've done fix and flips, unit turns, obviously mortgage field service work, which is everything from cradle to the grave, renovations, and glad everybody could come. Just want to kind of do a little quick introduction. Thank you so much.
All right.
Good afternoon, everybody.
Good afternoon.
I need some energy in the room. Everybody just flap your arms, stand up.
Hell yeah.
I first want to thank you, everyone, for showing up today. The reason we do this, come to find out that not a lot of people know this program is available. I was actually shocked at how many people did not know that you could get financing on a property, that you can get the financing for the renovations on the property when you purchase it, and that you can get financing, even to renovate a home that you already own through refinancing or purchasing. So I didn't realize that this had not reached enough people. So the reason we do this is to raise awareness. We're not really here for you to funnel all the business to our way and nothing like that. But what we're looking to do is just to raise awareness. So when you're at the tables discussing different loan options for the customers you run into, this can now be at the top of your mind. So what I'm going to do is give you an insight and break down the process from start to finish. Now, she had a question as to how long the process can take. The process actually can still be closed within 30 to 35 days, but you need to have all your ducks. You need to have all of your ducks in a row. Can everyone hear me? Yeah. I got a loud voice, so I really don't need this. So you just really need to have all of your ducks in a row. And what I mean by having your ducks in a row is one, let me get my presentation here. So give me the next slide. Having your ducks in a row is knowing what your options are. Okay? So previously, right now, the only option for a lot of people think they have, if you have a repair or if you have an issue that needs to be fixed on a property, or if the property is not up to the customer standard, you would have a repair escrow. Anybody's been involved in a repair escrow?
Yes.
All right. Everybody knows you got to bring the customer have to bring their own money to the table. All right. So the alternative is to finance those repairs instead of repair escrow. Next slide. So I'm going to start with the conventional option because everyone thinks everything is a FHA 203K. It's not all just 203K. So I'm going to start with the conventional option because that's the option I'm going to offer a customer first if they qualify. All right, and the reason I'm going to offer conventional first because just like any conventional mortgage, right? The mortgage insurance will fall off on its own, right? And then you don't have that upfront mortgage insurance premium as well. So first we're going to talk about the Fannie Mae Home Style and the Freddie Mac Choice. Those are the conventional renovation options. And again, compared to a repair escrow where the buyer funds this, the buyer funds the repairs, you can't put a safety or a structure hazard into a repair escrow, so then now your deal's dead, right? So, and then they cap you at $7,500, right? And you got the reinspection fee, and then they got to complete the work within 6 months, all right? But if we go with a home style and choice, all right, your repairs are financed, all right? We can do safety and structural repairs. That means foundations, roofs, right? Max allowable repairs. Now here's a pick because I call it. There's traps. This is the way your deal falls apart. There's traps. So the one trap is you only allow 75% of the after renovated value. So I'll give you an example. I had a customer who inherited a property off of Ryan and 7 Mile. Value of the house is $122, but the cost of the repairs is $114. All right, it's time to call the city and condemn it. All right, at that point, it's over 75% of his after renovated value. What you could do is I would consult people and tell them just get the bare minimum done, get whatever you got to get it to pass an FHA inspection, and believe it or not, you'd be surprised at what the FHA will allow. Like, to be honest, you'd be surprised. If it's a door there, even though the door looks jacked up, they say it's a door there. They're not going to make you replace the door. They'll still give you FHA financing. So they get 6 months to complete the repairs. And the HUD consultant is required for repairs over $15,000 or any structural repairs. But don't hire a consultant at your own risk. Because again, you're exposing yourself to risk if you don't. Next slide. Now here's the FHA option. FHA 203K, this is the one everybody knows. I started with the conventional so I can make sure people understand it's not just 203K. We just call it renovation financing. So again, FHA loan with a repair escrow, buyer funded, can't be, may be financed if it's a HUD home, no health and safety hazards, $500 to $7,500 in holdbacks, $7,500 in holdbacks, right? Reinspection fee, 90 days to complete the work. You go FHA 203K, you get all of your repairs financed. You can repair safety and structural items. You got a $7,500 minimum, so meaning, guess what? You got a house that's already renovated with no appliances. Go ahead and get your range oven, your stove, your microwave, right? Put your fence in the front, get some security doors. Half these homes don't have air conditioning units, right? So even if it's already renovated, they can use this option to add something to it.
10 to 20% contingency reserve. What a contingency reserve is this? They put aside 10 to 20% of the project cost into escrow. That amount goes back as onto the loan as a principal reduction. What's the principal reduction? So if I have to put $10,000 into contingency reserve, and my loan originally was for $100,000, well, that $10,000 will be applied towards the loan amount. So you only owe $90,000 once the job is complete. But if they open up the walls and find termites, or if they find rusted out pipes inside the walls, they can dip into the contingency reserve. And they get up to, actually, you can get to 12 months. 6 months is really what we hope for, but lenders will give you 12. So I put 12 up there. Next slide. So here's the two options. You got Fannie Mae's Home Style, Freddie Mac Choice Renovation, and then on the government side, you've got FHA 203K. Anybody wants these slides, we'd be more than happy to email them to you. So again, loan options, you've got one option available. There's no limited or standard. All right, and I'll explain the difference again, what the limited and standard means. Your max loan size, 766,500. So you're within Fannie Mae limit, right? That's all my lenders in there. That's my Fannie Mae non-high price limit, right? So I can go up to 766,500, 498,500, 257 on FHA. Now, here's your picks. Here's your traps. On the Fannie Mae Home Style and the Freddie Mac Choice, primary residence, second home, or investment property, but multi-units must be your primary. So if you're going to buy an investment multi-unit, you better not either want to live in there or give the lender a good reason why you're going to move into it. Minimum cost for repairs, none. Max cost for repairs, again, 75% of the after renovated value. So be careful of that. Anything higher than that, you're really looking at something that needs to be condemned.
I just have a question. For the multifamily,
Yes, sir.
be a primary residence, can you do it for 1 year or you have to?
That's a good question. That's right. Living in for establish your homestead, get your 6 months in a day, and don't tell me whatever you do after that is none of their business. So, and then again, no gifts of equity, no relationship with the contractor. All right, so that means you need to find another GC. If you got, my brother's a GC. Look, if it is, I don't need to know. All right. Consultants are required when it's $15,000 or higher on the job. I'm talking about the Fannie Mae and the Freddie Mac Choice. Okay. And no as-is value required. So this is awesome for your sellers. Your sellers aren't going to get their purchase price lowball. It's set in stone. Only thing we're worried about is the after renovated value. Now on the FHA 203K side, I've got two options. I got standard and a limited. Now, what the only difference between the limited, two sound differences. You don't need a HUD consultant, which is at your own risk. I'm going to tell you why it's at your own risk for reason number 2. The contractor gets half the money up front. So, you know how contractors do. No offense to any contractor in here, but you got to roll your money to get to the different projects. What he does is he'll manage the flow of funds. So that way the contractors are happy and the borrowers are happy. They only get paid for what they did. They get some of the money for the material orders up front. You get enough to pay some of your guys to go in and do some demo. Then you call him, he goes in and checks the work, makes sure it's there, gets a check cut to the contractor so they can move on to the next scope part of the job.
That's what the consultant do?
That's what a consultant does. He comes in and inspects that work that you completed. So if you went in and completed demo, you got a $10,000 bill of work completed, call him, he'll come out and inspect it, and then that way another check you get cut.
So do you start with your own funds?
That's why we do an initial draw. So you're going to submit a request as a contractor, you're going to submit a request for an initial draw. So remember, on the limited, you get half the money up front. All right? On a standard, you get half the materials up front to get started. Usually you start at the top, You pay your people, get the work done so he can come out and get you another check. No identity of interest permitted, meaning, right, you can't have a relationship with your contractor. But if you do, I don't need to know about it, and hopefully last names aren't the same. And so consultants are required on all 203K standards. The limited, again, $75,000. It used to be 30, what is it, 32 or 30?
Used to be 35.
Used to be 35. I didn't like this change because now it gives people the option not to use him. And again, if they come through me, I'm going to tell you you don't use him at your own risk. Because once the contractor gets half the money, if y'all have a disagreement, I can't get it back. Next slide. It's okay. And the last part, as is value is needed to determine the adjusted value on the refinance. So if somebody's doing a refinance, they're going to need two appraisals. One for the as is value and one for the after renovated value. So those are the only kind of traps, right? Got to have two appraisals on. Now, if you're refinancing it and you have a mortgage on it, there's a chance you won't need two appraisals. But the appraiser will need to give us the as-is value of the property to make sure they have some equity in the house and they weren't upside down when I wrote the loan. Next slide. All right. Difference between the standard and limited. So on the standard, again, minimum, what is that? Minimum 5,000. Yep. Right. Maximum 75,000 on the limited. Yep. All right. Eligible improvements. So on the standard, you can take a gut and turn it into a Taj Mahal. On the limited, it's more or less you find a house you like, but grandma had it. She left it with the green carpet and the yellow towel in the bathroom. You know, the kitchen cabinets are still, from 1975. Wallpaper. But Grandpa made sure the roof had enough shingles on it. He made sure the furnace was updated. He made sure that he had PEX and not still galvanized, right? But guess what? It's ugly. So the limited is good for putting a new coat of paint and some makeup on the house. Or again, you go into one of these properties that doesn't have air conditioning. Air conditioning run you from 8 different triple HVAC, $500 to $7,500, depending on how much. There you go. It's a limited. You should be looking at a 203K or a renovation option because hey, it's moving and ready. They can live in the house while the stuff's being done. I want new cabinets. I want new facing on my cabinets. I don't like this carpet. I want to rip it up. Or the wood floors. The wood floor is shining 10 G's, right? Just to refinish some wood floors? Are you serious? There you go. Bam, right there. Next slide. Oh, wait, hold on. So again, repairs on the limited, fee consultant. Again, on the standard it's required. It's an option on the limited. It's at your own risk. All right. And architectural exhibits, get that person. I want to knock down the wall. I want to add an addition to the house. Right. Okay. I'm gonna need an architect. You're gonna need an engineer. And the draws again. On the standard, the draws are based on the work as needed. They usually broke up into 5 draws. And then on the limited, there's 2 disbursements. One's beginning, one. Those are only 2 fundamental differences between the 2 programs. Next slide. Now I'm ready. All right, you can see that. All right. So again, compare the program. Standard is, I'm going to be real quick on this. The standard is for major, right? Limited is for just quick stuff, right? They're going to be moving into the house. It's not a gut, it's not a tear out, right? We already talked about the cost of renovation, the minimum cost and what it at least needs to fall within the limit, right? But here's on the right-hand side, that limited, it can help your customer prepare their home for the sale. Because they're going to get an after renovated value. So that's if you have a customer 6 months, say, hey, I'm gonna be selling this house in the next year, start having them think about this. Because guess what? That's more money from you, listing agent, right? Because if they could take their, what today is $165,000 home and turn it into a $225,000 home by investing 20 grand into it and then selling it 6 months later, that's still your customer and it's still gonna be money for you. Bigger closing, more money on there for them on the back end of that loan, on the back end of that sale. All right, and again, they can make their home move in ready using the limited, because again, you can do some refacing and just make it pretty. Next slide. All right, now here's the flow. It's a good question. This is answering your question. So I'm gonna give you a scenario. This is a $200,000 purchase. Closing costs are roughly, let's just say $3,000 in closing costs, $3,000 in prepaid. You've seen this over and over again. 3% in seller concessions, but we got $62,000 in repairs. Where are we gonna find that money? Next slide. All right. So this is would be your instructions. All right. We're gonna find a home, but I'm gonna talk from the heart here. If you have a customer that's in the market, the first thing they got to do is get their ducks in a row. This is how you cut down on the turn time on your file. Okay? Because like if the customer's ducks aren't in a row, I could take 45 days, maybe even 60 if their ducks are not in a row. That's why we're here today, so we help people get their ducks in a row prior to going out. First thing they need to do is get a hold of this guy, because he's going to do their initial inspection, and you need to get him in to inspect that home within his contingency. I always tell people, get him in there within the first 3 days of the execution of your contract. What he's going to do is provide a feasibility study. It's a list of what is needed to get that house up to minimum property standards. It's going to be a laundry list. It's going to tell you this is what's needed, this is what's needed, this is what's needed. It's going to give you another list of this is what we think you should do to this house at some point. It's going to give you another list, which is your list of what do you want done to that house. We're always going to start with the minimum property standards first. In his feasibility study, he's going to give you an estimate, a national estimate of what those repairs are going to cost. So your customer understands what they're walking into within the first 5 days of the contract. So that feasibility study is like, oh my God, this is insane, right? We know it's not feasible, it's time to move on. Didn't pass his inspection, get your EMD back. But if it falls within their budget, then you need to get your contractor in there, and he makes it easy for the contractors. He'll put together a blank bid for you with your customer's desired items and your required scope of work, and he'll have the bid put together. All the contractor do, all I gotta do is say, hey, fill in your numbers. He's gonna give you the scope of work needs to be done, because we know contractors don't go in to evaluate. We tell you what we want. You might see something that says, hey, this might need to be looked at or repaired, but it's not your job then. It's not your contractor's job to inspect the house. No. It's his job. It's just his job to go in and look at the list and say, okay, this is all he wants to do. This is what it's going to cost, and I'm going to send you out a bid. Okay, so do not let your customer depend on the contractor to tell your customer what needs to be done to the house. That's already going to be done. All he has to do is fill in his bid. How long should that take?
At least 24 hours.
That's right. Shouldn't take that long. How long? So what, we 4 days into the contract at that point? Right? Not even 7. So now you've got a bid in hand. The next step, so I've gone through this part, okay? So the next step is you're gonna call me, because I'm already gonna have your pre-approval, but I'm gonna complete what is called a maximum mortgage worksheet. You're gonna get a copy, you're gonna see a copy of this. It's a breakdown of how all of the costs associated with the hard costs. Because you got permits, you got draw fees, you got contingencies. So we come up with a max mortgage worksheet of how much we can write the loan for based on these renovation costs. All right? So we've chosen the HUD consultant. All right, we've had them go out, review the house. We've got a time frame, right? You've reviewed the max mortgage worksheet, your customer with me. All right? Now we're ready to order the appraisal. And we're going to redo the max mortgage worksheet accordingly to the appraisal. Next slide. I'm going to repeat this again. It's kind of the same thing, but it's more again, right? You're going to talk to an FHA approved lender. You're going to complete that max mortgage worksheet, right? Work right up in bids are provided to the lender. Lender processes underwrites and close the transaction. Send it off to an FHA endorsement, and improvements can begin. This is like the cut down version of it. But next slide. This is a max mortgage worksheet. Now I know the writing's a little bit small, all right? But at the top is your hard costs, $64,900. Those are your, well, no, I'm sorry. On number one is your hard costs, $62,700. His consultant fee on this is $800. That consultant fee has changed, but I'm just giving you what it was at one point. Inspection fees, right? $1,050. Those are for the 5 inspections during the process, during the repair process. Those are financed into this worksheet, okay? Title updates and permits, all of that's added up to a total rehabilitation cost with fees and reserves, because you see this in section B, financeable contingency reserves. That's again, they're putting 10% aside if they open up the walls or they have a problem and find out you got another problem. You take some siding off, you got termites, right? You go in the house, you turn on the water, all the toilet water comes up in the basement. Well, time for a dig out, right? Time to replace the P-trap, right? That's where you get into that. Because we didn't know it was a problem until you got into the project, right? We don't want to use that if we don't have to, because the customer gets their loan amount reduced after it's over. So, like that $6,200 would come off of their loan amount after the job is complete if you don't have to use it. So I can refinance it later into a better mortgage. So the total cost of this is $71,000. Next slide. So your purchase price is $200. After approved value is $250, subject to repairs. Next slide. Right? So in this particular case, right, everything's going to cost about $271,000. Right? Now, you saw that the repairs and the renovation costs are like $270, right? The cool thing about the FHA is they'll take the after renovated value, multiply it by 110 to give you a max mortgage amount, a max value of $275. So you can actually get the lesser, which is $271, and then you'll put 3.5% down on that $271, which will give you a max loan amount of the $261,679. That's how the math works. Anybody got questions on this part? Yeah, go over anybody's head with that. So basically, you're putting your down payment on the total cost of the renovation cost plus the house, cost of the house. Next slide. There's another breakdown. You've seen these on HUDs, right? So that would be the cash from the borrower at closing, based on all the closing costs. See alterations, improvements, $68,970. Prepaids, closing costs, MIP, right? And then you got some closing costs paid by the seller. Next slide. All right. So this is one for a conventional loan. In this case, after renovated value is $300,000. They're doing this with 5% down, primary residence. Next slide. Alterations and improvements, $62,700. There's your total cost on number 2, to include all the financeable costs like the contingencies and the drawn fees. So you're at $71,000 or $70,995. So the total purchase price and improvements is $279.95, and they're going to put 5% down. So there's your loan amount, $257,445. Next slide. There's a breakdown of what that customer would bring to closing. They would bring $13,550 to the table, which is not too much different than what you see on a regular transaction every day that you close. You know, if you're a realtor or a loan officer, you see it. Title company, you don't see it. It hasn't changed, right? Not much difference in cash flows. Next slide. All right. Self-help is not allowed. Please, please, please don't say, I'm a brother. I mean, here's the thing. I don't need to know. And just don't you make sure it's not, you know, if your last name is Walter Williams, don't use Williams Construction and Financing, otherwise they're going to wonder why, right? That's all. All right. So no self-help arrangements can be made. One of the things we don't encourage is side deals being made with the contractor. Please discourage your customer from making side deals with the contractor. It muddies up the process after closing.
What you mean by side deals?
So you got a scope of work, and your customer says, I want some recessed lighting. And can I pay you, or can we work it out through the funds or something? And it's not on the scope. It's just gonna muddy stuff up. If they want to put recessed lighting, look, do a change order, tell them to give you the money for the difference. Then get with him, do the change order. But don't just go and put the recessed lighting in, you know, thinking that they can move the money around. Well, we can allocate it from this into this. No, we gotta stick to the scope.
Don't do it.
All right,
Terrance.
all right. I'm running out of time. Next step. Next one. All right. Eligible properties. You can do the 1 to 4 unit. My favorite are the owner-occupied multi-unit properties, because you see a lot of them and they need a lot of work. That's the gravy ones. Okay, you can get those. It's great. You can do condos. You can even do modular homes, right? Log homes. You don't see many of those in Detroit. HUD REOs are also my favorite. Bank-owned foreclosures. You get those at a deep discount from asset managers. Trust me, I've seen it. Asset managers sell property as is in Oak Park for $100,000. It's been sitting empty for 15 years. Those are awesome. I love HUD REOs. Only thing is that the HUD store has been dried up over the years. But they're still out there. What's happening is the asset managers are capturing them and putting them back on the market. So be on the lookout for those. If it says cash conventional only, ignore that now. Take your customer, go look at it anyway. Because most of the time the sellers will accept those.
Excuse me, if so anything, I see ineligible or condo, what about anything 5 units or more?
So that's right. So
Answer the question.
No, I heard his question
No,
actually.
I want them.
Okay, yes. Go ahead.
So I was looking at the ineligible list, and you only have condominiums, and I see eligible 1 to 4 units. Can you finance anything above 4 units?
No. Nope.
Under 2 or 3K, you can't put bigger than 2 or 3D.
Oh, you're talking about like you mean like the regular? No, actually, FHA they cap you at 4 units. And anything over 4 units, really, you've got to go get non-quality mortgage or a non-QM loan or some type of commercial finance. Next slide. I want to just see if we can get through here. All right. Also, it must be an existing property. Has been completed for 1 year. I'm sure if it's just a new property, you probably don't need a 203K. But it's a pot. You never know what you want to add on to new construction after 13 months. But new construction properties aren't permitted, so we don't do new construction. And condos on the home style are permitted. So on the conventional, you can redo a condo. That's right. Next. All right. Loan to limit values 5% down on Fannie Mae. Actually, that's also on Freddie Mac as well. But if you want a 2-unit, right, you got to put 15% down if you go Freddie Mac. That's a trap. Here's another trap. If you're going to buy a 2-unit, owner occupied, using choice, Freddie Mac is 15% down. If you use home style renovation, it's only 5% down. And if you go, and really the choice is to go FHA if you can on a multi-unit because you only need 3.5. That's it. Next.
2.
So if you have someone who has a property that is, free and clear, or let's just say they're pulling some cash out to do this, they do need to contribute at least 2.25% to the refinance. So meaning after they pay for the appraisal, after they pay for his deal, they might have to bring a couple of dollars to the table, like 2.25%. If it's free and clear and they want to pull the cash out for renovation, they got to put at least 2.25% out of pocket towards the transaction. It's called a minimum borrower contribution. Your lenders know that term. Minimum borrower contribution, 2.25% if the house is free and clear. So they got to bring that to the table. And again, home style, no as-is appraisal required. The equity is proven after the approved appraisal. Next slide. All right, real quick, these are contractor acceptance forms. Contractors, if you want a copy of these so you can see what they're asking for, I can provide you with this. This is from Michigan Mutual Mortgage, which is my #1 home renovation financing partner. They're out there in Southfield. I'm trying to get my rep here today, but he has a bunch of work to do. So this is the contractor acceptance form. It's going to ask for your limited liability insurance, W-9, right? I need some referrals, and also we need to know what draw-related projects you've done, because we have to use contractors that have done draw-related projects. Okay, meaning that means they got paid in phases.
So if they're dealing with a consultant in that case,
so if they're dealing with a consultant, does the consultant provide those forms to them to give back to the lender, or am I going to give that to the contractor myself?
You're gonna produce those forms as a lender.
Because I have them. I'm in a situation where I pre-approve someone. I'm just kind of like, you know what, we'll send it. Let's see what happens.
Give the contractor those forms right away to get them fill that out.
Okay, but then wouldn't the consultant find the contractor ultimately to do the work, or?
No, the customer's going to find the contractor. What the consultant's going to do is we're going to give you a list of contractors. Now here's another thing. Do not just give your customers one referral. You will get blamed for what they do. Give them him, her, and two other people out there. Give them 5 people to call, see who they jive with.
We need some business cards in like
That's
that.
right. They may not jive with everyone. He might do good work, but the customer may not jive with him. But the customer might jive with her better, right? It just, you know how it goes, right? So give them more than one.
okay.
All right. But this is the proposal. So contractors, make sure you get a contractor that either has someone computer savvy on staff, or they might be at least computer savvy themselves. At least they can use a PC, right? Right, because you've got to fill out some paperwork. You got to be pretty decent with Excel spreadsheet, right? Because you got to break down your draw schedule. So this is something the customer is going to sign. Is going to see right here on the first line. This is the scope. This is the first draw. Second box is second draw. So you're going to put all of the items you want for your first draw in the first box, all the items you want for your second draw in the second box, and so on.
You said you giving those out, or?
We give those to the contractor. We'll help you fill them out too. He'll help you fill them out. Next.
Ask my question, which is, do I have to have builder's risk?
I'm sorry?
As a contractor, do I have to have builder's risk?
That's an excellent question. Repeat that question loud and clear. Make everybody hear that.
For other licensed builders in the room, that question is, do you have to have builder's risk insurance to participate in this program?
No, sir. All you need is limited liability insurance that you carry on your company already.
At what threshold? 1 million? 3 million?
I think it is that's a good question. That's a good follow-up question, but most of them I've seen with 1 million. I've seen some with 2, but most of them I've seen with 1 million. And then then start shopping. I want to open up for questions. Where's any more questions?
Earlier in your presentation, you said how often are HUD homes, no, my question is, how often are HUD homes upside down in Detroit?
Oh, so a HUD home, you mean a HUD home?
Yes, sir.
You're not gonna get an upside down HUD home. Because what a HUD home is, they've been recaptured by HUD because they foreclosed on it. It's been foreclosed. So HUD's just putting it back on the market. So it's not gonna be upside down when you get it. But you will have some investors who will have upside down property. They'll have a house. They took out a bunch of money on it, and now they want to get a renovation on it, but now the renovation plus what they owe is more than what the house is worth. You're going to run into that.
Thank you.
Oh, no problem. Miss Teresa, how are you?
Yes, sir. Hey, how you doing, Terrance? Say you can use the 203K for a refinance, right?
That's right.
So if someone purchases, say they bought a land bank home, and how long is the seasoning once they acquire the home and they may want to, do a 203K to get rehab?
Good.
Position.
What'd you say?
Can you use a 203K if the land bank is in first lien position?
That's a great question. Let me get the microphone for that one.
No, they actually asked the most important question that I really didn't get a chance to address, and I was hoping that would come up. So with the land bank, they give you a list of things to get done on the house, and then they'll go ahead and convey title. You cannot use the 203K to finance that list. You need to complete that list. Now the list isn't telling you to completely turn the house over. I've gone in some of these homes that have been land bank purchased, and then they cleared title and they've done the work, and they still need the stuff. So as long as they get their lists done and they get their title conveyed, on conventional, they can do it the next day. On FHA, they need 60-day seasoning. 60-day seasoning FHA, next day conventional. Not 6 months. That's after they have cleared, that means land bank has released their lien off the title. They can do a conventional, I can do it next day. Sure can. But FHA, I need that seasoning time. I'm not sure if they have been added to title and they just need to be removed. I gotta just double check if they've already been. That might mean they've already been seasoned. That's a good question. I need to touch bases with my lenders, and maybe someone in here can help me, because when they purchased the home using through the land bank, that buyer is added to title, right? Okay, so it's just land banks on as a lien. So when they're removing their lien, that doesn't eliminate their seasoning. So my argument to a bank or lender would be, or any underwriter would be, they've already got seasoning. So 2 months of seasoning is already passed. You would think, right? Make sense? Well, I mean, if they've been on title, and we know that there's 60-day seasoning on FHA, they've already been on title, there should be the seasoning already. It's just we had to release the lien from the land bank. Yeah. Yep. Yep.
And I'm here. Sorry, I'm doing my Walter, have you ever brought in Emma from
Detroit Title?
I invited her.
Okay.
I did. We're trying to get her in.
All right.
We actually have a closing with her with a renovation loan next week.
Any other questions?
How's everybody doing today? Thank you for having me. Thank you, Walter. No worries. You too. My name is Tori. I'm from out of town. I'm from Boston.
Oh, man.
I purchased a home in February, so I've been coming back and forth just to make sure everything's all right. But the home is already paid off, and it does need some work in between the lines. And I don't know where to begin, but these last couple of days I've been calling some the heat and plumbing people, and I've been trying to figure out what is the issue with the home, and there is a lot of issues. So where would you recommend me to start? Pretty much.
Well, I'm gonna start by giving you 2 business cards, Ponce. The first business card. No, this is live, right?
Yes.
Okay.
So the first business card I'm gonna hand him is Walter's business card. All right, and this is how you would do it, right? Because Walter's gonna go in and inspect the house, and he's gonna tell you exactly what needs to be done to get it up to what we call minimum property standards. Okay, so he's already done that. So we've identified what the city and the insurance companies will want you to do. Okay, so now we've got to come up with what it's going to cost to get all that stuff done, and you can call me because I can see about getting you financed to get those repairs done on the home that you already have purchased. And in that case, once he's inspected the home, he's going to put together a feasibility study. That feasibility study is going to give you an average cost of what it's going to take to get it up to par or where you want it. And then I would run a pre-approval based on that feasibility study to see what the loan amount would be and make sure we could get you approved. And then once I've got you approved, then you will start navigating the contractors, giving him, her, him, all of them a call to have them come out and see the house and give you a bid and fill out the bid that he's going to put together as part of the process. And then we'll go through the lending, the origination process to get your mortgage on it, and then, we'll get you set up for closing. So the first step you've done the first step, have them inspected. So the next step would have them do the feasibility study. And then also give me a call so I can get you pre-approved. Or one of the lenders. But you give us a call again to get you pre-approved for the amount, whatever we would estimate you would want, or your personal budget, because it's a free and clear house. Now remember, they're going to ask you to do 2 appraisals on it because it's a free and clear house. That's the only difference. That's the one. I say the one trap you'll run into is you got to do 2 appraisals. That's it. Any other questions? And what's your name again? Tori. I remember that. Leon, what's that? We got Leon from Title Connect. Everybody say what's up, Leon.
Hey. I got 2 questions. The contingency reserve, from my understanding, I'm just asking this question to clarify, is this based on the age of the home as far as the amount?
No.
It's not?
Okay. I'll tell you what it's based on. Go ahead.
Okay, and then my second question was, obviously I know we're not promoting that they do side deals, but let's say the buyer and the contractor do work out some type of side deal that goes outside of the work order, and the contractor doesn't get compensated for it. Do they have leverage to file a lien, or do they basically just have to eat that?
All right, so the first question is the contingency reserve. It's going to be based on the condition of the house, whether they're occupying the house, and yes, like how much work needs to be done. So if it's a property that's been occupied by the owner or the seller, or you're already living in the house, we can elect a 10% contingency reserve. If the house is jacked up and you're living in there, like it has some functioning issues with the mechanical portion of the house, like plumbing, electrical, or a roof, anything mechanical that requires a permit, it's probably gonna have charge hit, 15, right? If it's jacked up, tore up from the floor, vacant, it's probably going to be roughly 20. And in some cases, it could go up to 25, depending on what's going on with the property. And the second question you had was...
Let me answer that question.
Let me answer that. The side job question?
Yeah, the side job question.
Okay. I'm gonna let him, because he has a stance on the side jobs. I tell people, if you think you want to do something after the repairs, just talk to the contractor, talk to Walter, get a change order, and put the money into escrow for that change order. But making a deal with the contractor saying, I'm gonna get, give me recessed lighting and I'll pay you out of my pocket, that muddies up the the process for sure. But I'm gonna get the Walter to speak on it too.
No worries. I will be very blunt. I tell all my borrowers, no side deals. I'm gonna say this one more time for the balcony. No side deals. I left the client yesterday. They had an issue with the contractor, and one of their issues, and I didn't know that until I was at the property, was they made a side deal. Let me tell you what that's gonna cost you. If the project goes south, the lender don't care. except when they find out they can't get their report on time, and I have to explain why. So if a job goes sideways, you're gonna be on the hook. Because as a consultant, my Bible in this whole process, post-closing, is that work write-up or specification repair, however you want to call it. That's my Bible. So if you're going to call me out to say, well, Mr. Williams, he's supposed to put recessed lighting on my house, on my kitchen and dining room, and I'm looking at my SOR and saying, I don't see it.
Scope of work.
Scope of work, thank you. I don't see it, I can't help it. I've emphasized that to all the contractors that on my roster I train. Please, no side deals. Like Terrance says, you have a contingency reserve you can tap if they find out something that has to be addressed. But if you make a side deal, that is buyer beware. And this is the issue. As a consultant, I represent the lender post-closing. They're going to come to me and ask me, well, why is the project delayed? Because I've seen it. They'll stop it, their relationship goes south. They want to fire the contractor, it's going to add delays. Depending on the season, it may jack up your property. So I'm imploring all my contractor friends out here, no side deals. Okay, anybody else? Yes.
What were you saying, no side deal?
So on the contingency, in my experience as a contractor, contingency is usually for emergency situations like you talked about.
That's right, exactly.
Tearing off the siding, termites there, or behind the wall, rusty pipe. Can you use, and this is for my edification too, can you use contingency for cosmetic to add the recessed lighting, stuff like that?
Sure. So Walter, tell me if I'm wrong, right? So once you get to the fifth draw, you should be about 80% complete, right? Once you're 80% complete, you can use the contingency to add something. But we don't tell people that in the beginning, because then people tend to assume that they can use that contingency for crazy things, and it causes issues because then they start getting bright ideas.
No gold cups.
Okay, right. They start getting bright ideas with the contingency. So what we do is we like for the contractors to get started, see what's going on, open up the walls, see if you're gonna need to use contingencies for anything, right? Then when you get around to the third or fourth draw, the customer's all happy, giddy, they see their house getting completed, and then we can say, hey, if there's something extra we need to do, they want to do, at least then they'll know later, right? But we tend to train the customers to say, hey, you wait till you get 80% complete before you start getting any bright ideas.
Let me add to that. A question came up is when a contractor bid on a project. The blank, what I call a blank contractor's bid, is all that's required, which is the scope of work with no cost. Not quite. And you probably already know this to my contractor friends. You want to go put eyeballs to the property. You don't, regardless how thorough my report is, you still got the borrower in the back of your head. The borrower told you what they want. Go out there and do your diligence. Make sure that nothing has been missed, because things happen. The consultant may miss a thing or two. The contractor may miss a thing or two. Those things happen. Or heaven forbid, the appraiser come back at that, with their second appraiser come back and say, well, you know what? They should have addressed handrails and squeaky floors, whatever the case may be.
Downspouts.
Whatever the case. Put eyeballs on the property. Now the contractors that I train, I highly encourage them to have communication with the borrower for this reason of no or other. If you decide to open up the dining room, to have that open floor plan a lot of people see on HGTV, and it's not in the initial SOR, you can use your contingency, as long as it's pre-approved by the lender. Don't do the work. Don't do the work at all until you get pre-approved from the lender. To go back to your question, they don't have to pay you because A, you went outside the scope, and I'm dealt with lenders. They play hardball on that now. So, and last but not least, I have contractors in the past. They get a job, and on the first draw, they asking to deplete the contingency reserve. Things happen. Like I say, no one knows they open up a wall, you see termites. Those things happen. But as a consultant, that's a red flag. Because I always depend on my contractors. Like they depend on me for them to get paid in a timely manner. I depend on my contractors to do your job and actually inspect the property. Yes, you may not know what's on the other side of the wall. I get that. But I know that if it's going to cost almost the contingency to address it, then we have an issue. You need to do your diligence. So, on that note, if any more questions?
I'm ready.
Okay.
How more confident do you guys feel when explaining or talking about renovation financing? How more confident do you feel? So if someone comes to you, contractor says, "Hey, I got one of these renovation jobs for you," you're confident. Realtors, if you get someone that's thinking about doing a renovation financing and you want to put it in your contract, you should feel confident. Lenders, you should feel confident today to offer this product to your customers and know, hey, here's how I can cut down the lag time. So I just want to make sure before I leave here that everyone feels a lot more confident about the renovation options and could somewhat explain it to your friends at the dinner table or the lunch table or the meeting tables. Okay. That's why I wanted to make sure before we left here, because if that's not the case, we just wasted a whole bunch of time.
I can't say it any better than that. I would say again, thank you for coming. Lisa going to close us out though, but I want to personally thank you for coming. You didn't have to be here. This is a holiday season. You could be at the mall spending money, or you could be at your office trying to catch up on your last year's projects. But for you to take the time to be here, my team and I appreciate it. And again, like Terrance said, if you was here, you got a free meal, you end up with no knowledge, then yeah, we need a lot of help. Because we are here to educate you. We are not here, as much as I don't look at competitors and competition, I look at people that want to keep your family fed. And the best way to do it is diversification. So that's my spiel. Lisa, you can close it out.
We appreciate you all for coming out this afternoon. We hope that you have gotten a lot of knowledge on using the FHA 203K and that you're not afraid of it anymore. I kind of fuss at these guys sometimes. I'm like, this knowledge should be charged. We should be charging people. And this guy here says, no, we're going to do it as free. We want to let everyone know. But it's valuable. And I don't know, if the lenders here, are you already using it? Are you just starting to use it? Lenders, are you using it now, the 203K?
Yep.
Okay, good. And the great thing about it is that we've put together a venue where we all can come together. But sometimes you really like, I don't share my information with this realtor. I want to make all the money myself. And the lender's like, I don't want to give all the information to the lender because I want the deal myself. And then the contract, I don't want this contract to know because I want this deal myself. So I'm glad that we put it together where we're able to share and we all can benefit from it. Yes, sir.
One thing that I'm a realtor and a loan officer. One thing I think would be helpful, maybe to do one of these at a house with a contract. So we can talk about codes that are changing. We can talk about HVAC stuff that's changing. Maybe that would be a great idea in the future.
Okay.
Good idea. I like that idea.
Yeah. Thank you. And I also want to take a minute to thank our In Harmony Cafe, our host for the event.
Woo!
Mr. Ty.
Come on up. Where you at?
Ty, you're around.
Come on up.
and his wife, and I've been friends, we've been friends with them for years. Him and his wife own this venue, and it's a beautiful venue. And she was here and helping with the lunches she had to run with your daughter. But we appreciate you.
Glad to do it.
And you guys need a venue, come see them. My macchiato was very good. So thank you so much for coming. I hope you enjoyed yourself, and we hope to see you again at our next one.
One
and we
more
want to
thing.
pass on the word. Yes. Oh, we had a contest for the ugly Christmas.
Yes.
But no one really dressed, so I think I won the contest. So we're not even gonna, you know.
We don't want to insult what you put on this morning.
Yeah. But since we had a guest who did dress Christmassy, we'll allow our guest to win.
Yeah. She got the memo.
Yeah, so.
For something else, and I said, I didn't have time to go get others. So I said, oh.
Well, yeah, so you're great. You're great. We appreciate your support, and you guys have an awesome day. Be safe, wrap up, stay warm.
All right.